All right, let's talk about one of the best ways to keep more of your own money, tax credits. And believe me, these aren't just little loopholes. We're talking about a direct, powerful way to slash what you owe and seriously boost your bottom line.
So to get started, I've got a question for you. Picture this. You have a choice. You can either take a $2,000 deduction or a $2,000 credit. Which one do you pick? I'll give you a hint. One is way, way better than the other.
If you pick the credit, you are absolutely right. It's not even a close call. And here's why. A tax credit is a dollar-for-dollar discount on the tax you actually owe. So let's say your tax bill is $3,000. A $2,000 credit knocks that bill all the way down to just $1,000. Boom, done. A deduction, on the other hand, just lowers the amount of your income that gets taxed. So that same $2,000 deduction might only save you a few $100s. Big difference, right?
Okay, so here's our game plan for this explainer. We've got the basics of credits versus deductions down. Now we're going to dive into some of the biggest categories. Credits for your family, credits for education, and some really cool ones for going green. And then, of course, we'll wrap it all up with the key takeaways.
First up, let's get into how tax credits can help out with family life. Honestly, this is where some of the most popular and valuable credits are hiding. Let's start with the big one, $2,000. That's how much the child tax credit can be worth for each kid you have that qualifies. So you've got 2 eligible kids? That could be a $4,000 reduction in your tax bill, right off the top. So the big question is, who actually qualifies?
So to get that $2,000, you've got to check a few boxes. It's a 5-part test. The child has to be under 17. They have to be related to you in a specific way. They can't be paying for most of their own bills. You have to claim them as a dependent, and they have to be a U.S. citizen or resident. You know, a really common mistake is that age rule. The child has to be under 17, so 16 or younger at the end of the year. It's a strict list for sure, but definitely a rewarding one.
But what if your kid just turned 17? Or maybe you're supporting an elderly parent who lives with you? Well, don't worry, the tax code hasn't forgotten about them. That's where this $500 credit comes into play. It's called the Credit for Other Dependents, and it's designed for exactly those situations.
The reality is, just because your kid hits 17 doesn't mean your financial support suddenly stops, right? This credit gets that. It's perfect for that college kid who's 17 or older, or for a parent or other relative you're helping to support. Think of it as a great catch-all credit for the other important people in your life who depend on you.
Okay, let's switch gears and talk about education. We all know how expensive college can be, so let's look at a couple of key credits designed to take some of that sting out.
Check out this number, $2,500. That's the max you can get from the American Opportunity Tax Credit. We'll just call it the AOTC. And here's the really crucial part. That's per eligible student. So if you have 2 kids in their first few years of college, you could be looking at a $5,000 credit. That's huge.
Now, the AOTC is really laser-focused on helping students get that first bachelor's degree. It's only for the first 4 years of college, and the student has to be actively pursuing a degree. But you want to know its real superpower? It's partially refundable. That means even if your tax bill is $0, you could still get a check from the government for up to $1,000. That's actual cash back in your pocket.
Okay, that's great for undergrads. But what about grad school? Or what if you're not going for a full degree, you're just taking a class or 2 to brush up on your job skills? For that, there's the Lifetime Learning Credit, and it can be worth up to $2,000 per tax return.
So, which one's for you? Here's the deal. The AOTC is more generous and has that awesome refundable piece, which makes it perfect for a traditional undergrad. But the Lifetime Learning Credit is all about flexibility. You can use it year after year, you don't need to be chasing a degree. It's the go-to credit for grad students, or really anyone taking classes to advance their career. And now for our last big category. Did you know you can save some serious green by being green? The tax code has some incredible incentives for making your home and your car more environmentally friendly.
30%? That is a massive number. It's for the Residential Clean Energy Credit. Basically, you get 30% of the cost of new clean energy systems for your house back as a credit. And get this, for most of these projects, there's no dollar limit on the credit. None.
And we're not just talking about minor upgrades here. This credit is for the big stuff. Installing solar panels, putting in a geothermal heat pump, even adding battery storage to your home. So let's run the numbers. Say you spent $18,000 on a new solar energy system. This credit could knock $5,400 right off your tax bill. Just wow.
And the savings don't stop at your front door. Let's talk about your car. You could get a credit of up to $7,500 for buying a new electric vehicle.
I mean, come on. This is easily one of the biggest individual tax credits out there right now.
Let's make this real. A super popular car like the Tesla Model 3 can absolutely qualify for that full $7,500 credit. But, and this is a huge but, its price tag has to come in under the $55,000 cap for cars. And that little detail leads us to some really important rules.
Yeah, getting this credit isn't always a slam dunk. You've got to navigate a pretty specific checklist. The car has to be assembled in North America, it has to be under the price cap, and you, the buyer, have to be under certain income limits yourself. So here's a pro tip. Before you even step foot in a dealership, go to the official government website and check the list of qualifying vehicles. That list changes all the time, and you do not want a nasty surprise after you've already fallen in love with a car.
Whew, okay. That was a lot of ground to cover. We've talked family, education, and energy. So let's do a quick, lightning round recap of all these amazing credits.
All right, here it is, your tax credit cheat sheet. We've got $2,000 for each qualifying kid, $500 for other dependents, $2,500 for those first 4 years of college, $2,000 for lifelong learning, 30% for clean home energy, and that massive $7,500 for a new EV. The key takeaway is simple. Knowing about these credits can literally save you thousands of dollars.
And that leads us to our final thought. We've just laid out a map of some of the most valuable treasure on the tax landscape. So the real question is, based on your life right now, which of these credits are you going to look into? Which one of these could make a real difference for you this tax season?